Hello traders and welcome back to the Market Crux. Today I am going to cover a very super simple intraday trading setup which I have been using from quite some time. I keep on using it for my personal trades as well as anyone can follow this very simple price action based intraday trading setup I am going to cover today. So stay till the end of this video and you will be for sure going to get a new view, a new way of thinking how you should be doing intraday trading. I am not going to use any of the methods which are very unique, but then the way I am going to use is really going to be unique one. You can go and search on Google about the open equals to high, open equals to low strategies, and then opening range breakout strategies basically. So these are very common among various traders across the world, and a lot of traders are successfully trading these strategies. But today I am going to cover a very unique way of trading open equals to high or open equals to low along with opening range breakout. So a combination of these two price action based intraday setups which we will be talking about today, and I'll be giving some of the examples as well. Everything you will need to trade this setup successfully will be covered in this video, and we will be shortlisting stocks for this purpose. What kind of stocks we will be trading, those scanner, and then how you should be taking trades basically. So no indicators, no jargons of any of the technical analysis, plain simple price action and some smart works. So stay tuned. Let's start. So first of all, I will be going on a website called chartinc.com. This is the website which you should be using frequently. I use this website for a lot of scans which I use to shortlist my stocks, and we will be creating a very simple scan today to shortlist stocks. I will be covering all the rules which you have to follow to trade effectively. So this is something coming from my personal experience, and you also need to follow these rules to trade very effectively, because these two setups, the open equals to high or open equals to low and opening range breakout, are very common setups. A lot of beginner traders start with these setups and you will find them across internet, a lot of people explaining them, but the way I am going to show you that how you should be taking your trades is quite unique, and that will increase probability of profits manifold. So stay tuned. Let's get started. So we will be going on chartinc.com and create a scan for ourselves. Now carefully follow these rules which I am going to show now. First of all, we will not be trading any low float, low volatility or low liquidity stocks. So we need stocks which are having a lot of liquidities where we can take proper intraday trades, and manipulating those stocks against technicals is a bit difficult. So first of all, we will be only trading the futures segment. You can trade cash, no issues at all, but then your shortlisting of stocks must be always from the futures segment. This actually narrowed down our search for about 140, 150 odd stocks, out of which we will be taking our trades. And every day you should be looking for about 2 trades, not more than that. And each trade will give you approximately 1% return. So that is astronomical return if you consider intraday trading. That's if you are able to do that consistently, you are doing much better than rest of 95% traders out there who doesn't really make money intraday in intraday trading. So first of all, we will be using only futures segments stocks, and next is basically what I need is the closing price of this particular stock which I'm going to trade is at least should be greater than 100 rupees. So again, we will not be trading stocks which are in futures and options segment but trading below 100 rupees. There are quite a many stocks which are below 100 rupees like Idea, Cellular and all, Yes Bank. Those kind of stocks we will not be trading. We will be trading only stocks which are having closing price of previous day greater than 100 rupees. Okay. Next thing which you have to validate is that this scanner now I am creating to buy the stocks. Okay, so this is buy side scanner. We will be creating a sell side similar scanner as well. So for buy side, my first condition is rule number 1, futures only. Rule number 2, 100 rupees plus stocks only. Rule number 3, my open price of the first 15-minute candle. So carefully watch it. First 15-minute is, this is how you can select in chart view, charting. This is the first 15-minute candle. The open should be equal to the low of that candle. Okay, so what we are checking over here is a strong bullish candle which has open equals to low, and there is a good buyer's sentiment on the first 15-minute time frame. So with this strategy, you will not be trading anything before say 9:30 or 9:35. So you will have to wait for first 15 minutes. Do not take any trade for first 15 minutes. Let the candle form, and we will check what all stocks are there which has open equals to low. So let's run this scanner and let's see how many stocks were there. So out of 150 odd stocks, we got only list of 7 stocks which had this open equals to low at the beginning. Now the next rule, rule number 4, 3 we have already configured over here. Futures greater than 100 rupees price, and the first 15-minute candle open should be equivalent to the low of that candle. Now fourth condition is that this candle should not be having more than 1% movement of the stock price. Now on a certain day you might even increase to 1.5%, but not more than that. So more than that. So any stock which has already done a movement of say 1.5, 2%, 3% in the beginning session, like in the 15 minutes of market opening, we will not be taking entries into those stocks. Okay, so one condition we have checked over here is open equals to low. So this is coming from the open equals to low or open equals to high setup. The next condition which I am making over here is to ensure that we are finding a narrow range. A stock has a bullish candle, but the range itself should be less than 1%. So what I'm gonna do is over here, latest 15 minutes high, the first 15-minute candle, the high of this candle minus the low of this candle. Okay, now little bit carefully configure. Equals to 1 is basically the first candle, and if you use 0, 1, 2, then those are the previous candles. 0 is the latest candle, 1 is the previous candle to this one. So you will always need to use this equals to 1 over here. Okay, now high minus low should not be greater than, so it should be less than the close of a first 15-minute candle. The close of first 15, so this is the price, closing price of first 15-minute candle into 0.01. Okay, sorry, this number needs to be changed over here, 0.01. Now what I'm doing over here is just checking that first 15-minute candle is not more than 1% of the overall stocks price. Now let's run the scanner once again. Let's see how many stocks we got over here. So these are the 4 rules you have to configure. This is the scanner. We are done with this scanner already. And we got 2 stocks which qualifies for our trade on last Thursday. So Thursday was the last session, and these are the 2 stocks which we got qualified for trading. Now we will be looking for the opening range breakouts. Since this scanner is for buy entry, the bullish trade setup only, we will be only looking for buy entries for these stocks. So now I am coming onto the chart for Godrej CP. So let's just come and see over here what has happened with Godrej CP. I'm just removing all the drawings. Okay, so if you see carefully, these first 5-minute candle, 1, 2, 3, this forms the 15-minute candle actually. So you can even move on to the 15-minute time frame, doesn't matter over here, and you will find the first 15-minute candle right over here. This is the first 15-minute candle for 24th December Thursday. So what we have to do now is let it form and let it just draw the horizontal lines on the top of this candle. So even if you see over here, this is the top of the first candle and this is the bottom of the first candle. If you see on the chart now that this bottom over here is open equals to low. This is the lowest price of this candle and a strong bullish candle has formed. So this stock qualifies for our long entry. Now the setup is very simple. Once you have shortlisted the right stock which has exhibited some really good bullishness in the opening and is still not ran too much, it's not moved like 2%, 3%, 4%. So this is a real good candidate for going long over here. Now next comes a very important rule that we will take an entry on the breakout right over here. So you know all your entry criterias are fulfilling over here, and these 3 5-minute candles, if you see, are perfectly aligned. There is no bearish candle. There is, if you see long wicks on the bottom of these candles, so that means it signifies that bulls are not letting the price go down, and this is really good price action to go for a long entry. Now how would you be taking the long? So that rule is very simple, that you will just look for this breakout of the high. Whatever is the highest high of these 3 candles, you will be looking for a breakout above that and you will take an entry. So here if you see over here 723 odd is the entry level for us, and we will take the entry on 723.1 whenever it breaks. So this is the 4th candle. This did not break the high and this one is the entry candle. So here we will be taking the entry. Now when you take the entry over here, you need to clearly identify that stop loss is below the low of the day. Now this is very important, and that is why we actually filtered stocks over here which are only ran either 1% or less than 1% of the price. So this will give you an ample amount of opportunity to manage your risk. Your stop loss will be somewhere below this candle, and if you see how much this candle, this low to high of these 3 candles is about 6.25 rupees, which makes it about 0.87% of the overall price. So keep a stop loss just below this, take an entry over here. What will be my profit target in this trade? So ideally I keep on saying always that if you are getting 1% in your stock intraday trade, you are tremendously doing good. So consistently 1% gains are really good, but our first target will be just equivalent to this range. Okay, so 0.87% will be my first target. Just copy this range over here which you have marked already, and from your entry onwards you just need to place this range and check whether you are getting your profit target or not. Okay, so if you see over here, within 10 minutes time we got our profit target on this candle. Just book your profit and exit. As simple as that. Most of the days you will be finishing your trades, couple of such trades, before 10 a.m. So if you see over here which candle it is, 9:40, 9:45, you will be booking your profits. And even if you look for 1% profit target, that is also given. So ideally I'll be looking for this much, whatever I'm putting as a risk, that much gain if I am getting. Consistency wise, I can tell you this setup will work more than 75% times. So if you are a winner with more than 75% accuracy, even if you are maintaining 1:1 risk to reward ratio, you will be net gaining and you will be a profitable trader. As simple as that. Just follow basic price action and basic rules which we have to follow every single trade. So this is the example of Godrej Consumer Products. Now let's look for the second. Now what rules have been needs to be followed, I have already covered all of them. What needs to be avoided is also something very important. So in this setup you must avoid certain trades, and there are rules for those as well. Before going into that, let's just check the Grasim Industries chart once. Okay, and let me just remove all the existing drawings and let's just check what has happened with Grasim Industries. Okay, so setup says that first 15-minute candle is a bullish one. So I'm moving on to the 15-minute, and this is the candle over here. Okay, so this candle is a bullish one. So this qualifies our criteria. Open equals to low. Yes, this also qualifies our criteria. So let's just keep our horizontal lines marked over here. So this is the high of this candle and this is the low of this candle. And let's just check the range as well. Everything gets fulfilled actually over here. So if you see, this is less than 1% to move in the first 15-minute candle. However, this stock qualifies for a long entry just above this breakout over here. Did we qualify for this thing? No. For the entire day, Grasim could not actually break above the first 15 minutes candle. We will not be taking any trade over here, as simple as that. Don't look for short side entry. Don't look for finding a range on the short side which will qualify your criteria. First 15 minutes there were some bulls. This was a bullish candle. So this stock does not qualify for a short entry. Even if it falls for another 5% or 10%, I do not care. So this will not qualify for my trades. Now again coming back to the screener. So these two were my buy side entries for Thursday. Let's just reverse this scanner and try to get one for short side entries as well. So you can very well do short selling. The rules will remain the same, but let's just check certain criteria which will be changing over here. So for short side entries, we will be making a minor adjustment in this particular scan. So what I'm doing is basically checking of first 15-minute high and low is less than or equal to the 1% range. Let's just make it equal to as well, is the common factor. So common factors will be, we will be trading futures segment, we will be trading stocks which are trading above the 100 rupees price, and the first 15-minute candle range is less than 1% is the common criteria. The only criteria for short selling gets changed is 15-minute open equals to, instead of low, it should be now 15-minute high. And for that, I'm going to create some sub filter over here. Okay, so this is the sub filter. I created this sub filter, and what you have to do is select the futures and pull this particular condition into this sub filter, under this sub filter. Okay, and then we will be instead of all condition, we will mark it as any condition, because I need either this or the next one, where the first 15-minute open. I'll explain you in a minute that what I'm doing, so don't worry about that. First 15-minute open equals to the high of first 15-minute candle. So what is going to happen now? The filter criteria will check whether there is a bullish candle or a bearish candle. If any of these two criteria is fulfilled, it will return the stock name. The remaining filter remains the same basically. So let's just run it now and let's check. So if you see over here, there is one more candidate. We got Dr. Reddy. Now what is going to happen with this scanner now, that you will be getting both long and short side entries in a single scanner, and you will have to check on the chart which stock qualifies for long and which stock qualifies for short entry. So if you see Godrej CP and Grasim, we have already checked, so those were the long entry stocks. Now the one additional stock is Dr. Reddy's, and let's check the Dr. Reddy's as well. Okay, so I am going to remove all the drawings once again over here, and this is on the 15-minute time frame. Dr. Reddy's, this very strong bearish candle, if you see over here on the first 15 minutes, and then there was a wick underneath. So there were some buyers trying to retain the price somewhere upside, but then it was more than half of the candle where it closed. So I will consider it as a real good strong bearish candle, and a momentum should continue, which is evident as well on the chart. But Let's just do our marking thing once again on this stock. So I'll be marking a horizontal line on the high. This is going to be my stop loss for a short entry. Okay, and this is going to be my entry level. I'm coming back to 5-minute time frame now, and let's check what has happened on the 5-minute time frame. So these are the candles over here, 1, 2, 3, and what was the range it has exhibited. Okay, so this was about 0.89% and 46 points drop in the first 15 minutes. Now we need to be checking that whether we got this much in our short entry for Dr. Reddy's or not. There are few more rules which I follow, and I'll be covering those as well. I don't think that we got full potential. 46 points it did not give, and here comes our rule to protect ourselves from bigger losses actually. So there is one more rule which we have to follow. We got an entry over here in this range which looked perfectly all right, but again, so there are a couple of simple price action reasons because of which I might not take this trade. One is right over here in this range. If you see, the stock has exhibited a good solid support over here, and from here it ran actually on a day before. So this is one of the criteria because of which I should be alerted that probably my short entry might not yield the full potential or full target which I am calculating right now. So this is first thing which we have to take care of, that from the previous day we should not be hitting a support range when we are shorting or hitting a resistance range when we are going long. So this is another rule which you have to follow. There's one more key criteria, that once you take the short entry, let's say you already taken the short entry in Dr. Reddy's with this setup. Now when you see the sheer price action once again, that stock is trading in this particular range over here and broken down on this candle. Okay, so this candle, when this breakdown has happened, ideally your stop loss should be moving over here. Do you see this particular rejection, another round of rejections, and then from here it fell down and there is one more rejection. So when you are on this candle, your stop loss should by default come to this level over here. From here to here, trail the stop loss. So at the worst case, when the trade doesn't materialize, you are not able to book the profits either. In that scenario, what is going to happen? We will hit the stop loss on this candle, and how many points you will be losing? About 10.45, about 10.5 points on Dr. Reddy's, which is trading about 5,000 rupees. So this is about 0.2% stop loss on the stock price. This needs to be taken care of. Once you enter into your trade, always the trade management comes into the picture. Trailing stop losses, booking partials, these are the things you should be always taking care of. Anytime when your stock is giving you about 5.5%, I always keep on telling this on my channel as well, that when you are in a trade and if you are getting 0.5% of the stock's price in profit targets, in profits basically, that trade you should never be closing in red. Ideally, you should be narrowing down your stop loss and making sure that you are not losing it big. Alright, so this example was to demonstrate how you should be managing your trades. As I said, that about 75% accuracy is what you are going to get. There will be some trades which will not work as per our expectations, but we have to live with that, and we need to be very careful with this part where the stock is not really hitting any support or resistances before we reach to our profit targets basically. So that you need to take care of. Let's just save this scanner. I am just going to give it some random name, OHL and ORB. Okay, and submit it. So this is now saved. And the beautiful part is that on the saved scanners, what you can do is you can do some sort of back testing also. So this is on the Thursday. These are the stocks from Thursday. The same scanner you can use on coming Monday, and then in future also during intraday after 9:30, about 9:31, 9:32, you just run this scanner and it will give you the stocks which you should be putting on your watch list, do the marking and trade with the rules which we have covered. What was before this day actually? So if we go and check what was this date, there was one stock we got on December 23rd, and that's Hindustan Unilever. So let's just check Hindustan Unilever on a day before. Okay, and you can keep on doing back testing for 100 other stocks, and just let me just remove drawings. And this is the day over here. Okay, let me just move on 15 minutes. And the second last day, this is the last day, 24th, this is 23rd December, this is the first 15-minute candle over here. If you see, first 15-minute candle is this one. And over here, if you see, Hindustan Unilever was a bearish candle on the first 15 minute, right over here. Okay, and we did not get any short entries over here, so nothing to trade on 23rd December. Let's just move back and check over here. This is 21st December, and quite many stocks on 21st December. So let me just randomly pick one. Wipro is I'm picking up. Let's just check what has happened with Wipro on 21st. So this is 15-minute candles. Okay, this is 23rd and this is 21st. So this is the first 15-minute candle, marking over here the high and the low of first 15-minute candle. Okay, and this candle looks bearish actually. Let's just check on the 5-minute. Why this came into the scanner as such, because this was not open equals to low or open equals to high. Let me just check on the 5-minute time frame on 21st. Seems something is a bit wrong. Okay, so this was the open equals to low on the first 5-minute candle, but this should not come on the 15-minute scanner. I'm not sure why it is coming. Seems to be some issue. Scanner seems to be right, but this chart looks a bit different. This is 22nd. I'm sorry, I'm looking for a wrong date over here. This is 21st, so we need to move back a day in the past. Just remove the drawings, and this is the day we are talking about. Okay, so this was again did not qualify for a short entry. This is first, second over here. If you see, this is the first candle, this is the bearish one, and if we move on to the 15-minute, this is the 21st candle. Let me just see where we did mark that. So this was the candle over here. This is the 21st December. We got a short entry. Okay, we got a short entry over here, and let me just explain you in detail. So this candle was bearish one. So our rule says that we will be looking for short on this of 358.6 levels. I'm moving on to the 5-minute once again and going back on 21st. So this was the marking. Eventually what happened, this did not break down, stock went up, and we will just do nothing over here. No long entry. This is the first range over here, about 0.94%, 3.5 rupees, 3.35 rupees is what I'm looking for on the short side. So I'll be looking for waiting over here, and if you see, the entry was given at 2:15, quite late during the day, but it was given. Still, this trade qualifies for my opening range breakout on the downside. And if you see this breakdown candle, just couple of candles over here within 10 minutes, it gave us the target, and if you are trailing it right, you could have made about 2% returns on this trade. So when you find a clear down move like this, just keep on trailing your stop losses. So first stop loss will be obviously over here, then you move over here, then you move over here. Once you have seen this candle, this has marked already, this is done already, and when you are on these particular candles, these couple of candles, your stop loss moves here on the cost. But that much doesn't really needs to be done on the full position, as we are entering with our rule number 1, which is basically that we will be taking our profit equals to the range of the stop loss. So first profit taking will be somewhere over here, about 3.35 rupees is what. And here you can book your full trade, well and good. If you are not booking full position, 80% of the position can be booked over here, and remaining you can trail. So always make sure that when things are working in your favor, as an intraday trader, we need to manage our trade appropriately, and we need to ensure that we are not still losing big money. So if you remain rigid, then there may be a possibility that the opportunity which is there in front of you, you could not able to capitalize, you could not able to book profits, and then eventually that trade turns into negative one. I always keep on saying this thing, that looking profit is not the right thing, booking profit is the right thing. So not always just look at the profits, keep on booking as well. So this is the first profit target, where you should be booking your about 80% of the position, remaining 20% you can keep and keep on trailing for bigger profit targets. But if you are strictly following the rule equivalent to the range as well, that's absolutely fine. So these are some of the examples. This scanner I have saved just now. I'll be putting this into the description box on video below, and you can just copy this scanner yourself and use it for your trades, use it for your backtesting purpose, and let me know about your findings. So share your feedback in the comments below. You can like, share and subscribe the video if you liked the approach. This is very simple, no indicators needed. A beginner can also follow this setup very well. All right, this is this much for today's video. Let's be in connect on Telegram, Twitter or front page. I'll be putting links to join my Telegram group or Twitter account in the description box. Join there, spread the video, and thanks for watching.